Hey everyone, welcome. I'm excited to have you here today in this webinar about what to expect for 2024 as it relates to the real estate market. I got some higher interest rates, got inflation that's persisting, got some economic uncertainty, all on the horizon, but there is undoubtedly some challenges ahead, all right? However, real estate remains one of the best vehicles for building long-term generational wealth. And with all the right strategies and the perspectives, there still remains tremendous opportunity in this market for those that are positioned to capitalize on them. So today I'm going to talk about the current economic landscape and what's going to unfold in 2024. Okay, then we're going to get into some specifics around pricing, interest rates, and more. So I'll outline some of the challenges, but also some of the opportunities and provide you with some actionable tips that you can implement in your real estate business and your real estate journey that'll set you up for success no matter what happens. All right. So before I get into that, I'll tell a little bit about me. Now, my name is Agostino. I'm with Bulletproof Cash Flow. I've been in the real estate game for almost 20 years at this point. Started doing small multifamily, single family stuff, almost 20 years ago at this point. And I'd say about 6-7 years ago, made a real big push into multifamily. I started doing B and C class stuff. So from there, we ended up expanding into development, including ground up development and adaptive reuse. And we also have a blind pool net lease fund where we help people get into real estate in a very safe and secure manner using net lease as a vehicle to get steady monthly returns. Okay. So needless to say, I've done a lot of transactions. I know what I'm talking about when it comes to real estate. So, want to throw that out there. If you have any more questions about how to do it, or maybe you want to learn how to get into real estate yourself, okay? Check out multifamilyaccelerator.com. We have complete coursework, including a 50-week mastermind that helps people like you bust it up in real estate. All right, so go ahead and check that out. All right, it's a live mastermind every single week. I'm on the mastermind too, so I'm showing you what you need to do to build success. All right, so let's go ahead and get into the webinar, okay? Let's talk a little bit about the current economics landscape. So let's talk about what's been happening in the economy and how we got here. Back in early 2022, inflation really started surging, reaching a 40-year high of 9.1% by June. Now, this prompted the Fed to start raising interest rates to combat this inflation. Rates climbed from zero, well, just about zero anyway, to over 7% on a 30-year fixed mortgage within a 12-month period. Okay, so this rapid increase put immense pressure on the housing market, with sale prices declining year over year for the first time in over 10 years by mid-2022. Now, at the same time, rents have continued rising, given that persistent supply-demand imbalances. You had all kinds of that going on, right? So on a macro level, GDP growth slowed down, but still expanded 1.1% in Q1 of 2023. And the economy continues adding jobs. There's nearly 500,000 jobs created in June. So while growth is slowing, at the time, we weren't in an official recession just yet. However, higher rates have pushed mortgage financing out of reach for many, many people out there. And elevated inflation, especially around necessities like food and energy, now consumers have less discretionary income available to spend on other things. So consumer spending trends, they lower and push us into a recession. All right, that's where we're headed right now. So in summary, high inflation, rising interest rates, slowing growth, all of this really puts us in a position of a recessionary period, okay? Challenging conditions, but not a financial crisis just yet, okay? But it is coming, okay? So what are the predictions? Well, the predictions of 2024, specifically around real estate, is there's a lot going on here, right? We'll talk about the mortgage rates, the home prices, commercial and real estate as well, and also alternative real estate scenarios as well. So let's talk about mortgage rates first. So most economists expect rates to remain elevated in the first part of 24 and declining as we go through 2024. There's talk of 4 rate drops in 2024. Now again, there's no crystal ball that says so, but the general hype on the street is that we're going to start seeing some decreasing rates going on in 24. Okay, I still think rates are going to sit around 6.5 to 7%. Okay, and maybe go down to a 5 to 6% range by the end of 24. But the Fed's terminal rate will likely be between 5 and 6%. And as inflation comes down, 30-year fixed mortgages should also follow suit. Rates above 7% are untenable long-term given the affordability constraints. So while it may not return back to those 3% rates that we all saw and thought that it was amazing, well, I mean, I really don't think we're going to see those days ever again, at least not in our lifetime anyway. I mean, that was a very isolated incident. It would be great if you get into a 3% rate, right? But if it ever does again, be sure to grab some of that money, all right? Now, let's talk about home prices. In terms of home pricing, 24 will likely see low single-digit declines nationally, especially in those cities where there's those huge pandemic gains like Phoenix, Las Vegas, Boise. I expect the correction to persist in early 2024 and continue on. But you know what? If you have a well-located, move-in ready home in a strong job market, you're going to continue getting a lot of buyer competition. Certainly, rates are going to be coming down, okay? There's going to be limited resale inventory, and the pricing is going to adjust accordingly, but it's not going to be like some of those other crazy markets that had massive jumps leading up to 2023, okay? So while still elevated, prices should moderate 5 to 10% from those peak levels we saw back in 2019 even. So this essentially gives us some unsustainable pre-pandemic gains there that we were seeing before, right? So things are going to start coming down now, and things are going to start making a little more sense. But by mid-2024, rates potentially declining, buyer demand may come up a little bit, may strengthen because the money, in our minds, you see the money coming down a little bit, money's a little bit cheaper. So we're going to slow down some declines. We're going to see those declines that are coming down. It's going to slow down a little bit too, right? So expect a bumpy correction early on, and by late 2024, maybe there's even going to be a recovery. So now shifting to commercial and industrial, right? Now, industrial is going to stay strong given the demand for warehouse and logistics, okay? Why? Because of e-commerce. E-commerce is still growing, okay? Multifamily also remains attractive for investors with rents continuing to rise given the supply-demand imbalance that we talked about earlier as it relates to single family. Again, people can't go out and just buy single families anymore the way they used to. The cost of money is expensive and people still need a place to live, so they're opting for renting instead. So livability and affordability concerns make rental housing essential at this time. Now, when it comes to office and retail, that's a little more uncertain. You got remote workers that are demanding to stay home and work from home and all that stuff. I mean, so much to the point where I see articles written about people like basically fighting back against working in the office. And, I think that you're going to see a lot more of that. We still have a lot of office vacancies. Many of the lenders that I've spoken to don't even want to do office right now. But still, well-located office buildings with a strong tenant roster should still withstand the turmoil. And those necessity-based retail locations like grocery, and healthcare, they adapted better to recessions as well. I especially like Dollar Generals and Dollar Tree and dollar stores, all right, Family Dollar, stuff like that, because that has become the general store for many, many people out there, okay? So quality commercial assets in sectors with long-term tailwinds should provide stability when there's a whole lot of volatility taking place. Finally, let's talk about alternative investment asset classes. So this might include, like, say, a fund or a REIT that people invest alongside experienced investors. So why should you consider these types of vehicles in 2024? Well, with rising rates and home prices, the barriers to entry for direct ownership, it grows tremendously. So smaller checks to start through syndication or a fund, it unlocks opportunity that's been out of reach for many, many people out there. Okay? And by you investing alongside a proven operator with a specialized market or sector skill set, allows you to capitalize on their knowledge instead of you trying to reinvent the wheel on your own, right? What do I mean by that? Well, as a syndicator, I get access to deals way before the market does because of the relationships that I built over almost a decade at this point in my market. So chances are, if there's a deal to be had, I'm usually the guy that sees it first in my market, right? And what I'll usually do is I'll take that deal, underwrite it, lock it up, and then propose it to my investor community. Okay? That's typically what we do. And you're better off trying to do a deal like that than trying to go it alone where you've never done it before. And I mean, the likelihood of landing a deal by yourself is going to be very hard to do to begin with, okay? Because you're not going to know about the deal. And if you do know about the deal, chances are it's already been through my hands or someone like me in that market, and they've already passed on it. So you got to know what happened with that deal. But, you know, any real estate crowdfunding deal will exponentially grow because of where we are in the market cycle. Okay, I think we're going to still see in 2024 anyway a lot of capital flowing to these types of assets because, again, people are looking for safe havens and they're going to rely on those sponsors to put together some really good deals. All right, so in summary, for investors seeking cash flow stability or wanting to start out syndications and funds, maybe you should take a close look at it. You may want to consider that so you can, again, invest alongside talented operators. Okay? So in this unstable environment, what can you do to not just stay afloat, but actively capitalize on this uncertainty? Well, here are 5 keys to position yourself for success in 2024. Okay? Number 1, lean into a niche sector with enduring demand drivers. Okay, this includes affordable multifamily, maybe some workforce housing, some single tenant net lease type deals. Self-storage is another one. We don't really do self-storage, but you know what? I like self-storage. I just don't do self-storage, right? But these recession-resilient industries give your assets and your money additional stability, all right? Number 2, target growing destinations, welcoming new residents despite the volatility. Okay, so what comes to mind? Dallas, Austin, Miami, Orlando. You got strong job growth. You got business expansion. You got domestic inward migration as well. So use of data to identify economically vibrant metro areas. Okay. 3, focus more on cash flow than appreciation. Okay. This is something that I've always done this. I've always focused on cash flow markets. That's why we call ourselves bulletproof cash flow, not bulletproof appreciation. All right. So in times like this, cash flow is king. Focus on the cash flow. Okay. It makes financing that much easier, and it gives you enduring passive income while we go through the storm, right, of financial uncertainty. Number 4, syndicate and invest passively, where direct ownership has bigger barriers to entry. Okay? Pool the resources from yourself and other people into an asset is a great way to get into a deal, understand how the deal works with a proven operator, and leverage their expertise. Why not, right? Number 5, create solutions to meet today's affordability crisis. And what does that look like? Maybe you want to buy into a deal yourself. Consider doing a smaller deal like a duplex or a townhome, or even house hacking for that matter, right? And what you're doing is you're providing housing for other people, and you get to make some money along the way. For that, you may want to check out our multifamily advantage program. We help you get into deals like that, okay? So in summary, carve out a recession-resilient niche and target economically vibrant areas and emphasize cash flow over speculation. Get into a syndication rather than go solo. And if you have to go solo, expand the housing supply by doing duplexes and house hacking and triplexes, fourplexes, things like that, where you can get in for very little money and help the affordability, build in the affordability rather for other people that are out there, okay? If you implement these 5 keys, you can not only survive, but also thrive amidst this ongoing volatility, all right? So we undoubtedly face challenges in 2024. It's, I think there's a potential recession coming our way. You have this high inflation, you have high interest rates, but none of this spells disaster for real estate investors. In fact, volatility creates opportunities that savvy investors can capitalize on. By positioning yourself on the right side of demographics and economic trends and focusing on fundamentals like cash flow over speculation, you can build durable wealth for the long term. The investors who persevered through 2008's housing crash ultimately came out ahead because they stuck to the market fundamentals and they invested when other people ran away from the market. You now have the blueprint and the foresight into the conditions ahead. So rather than fear what may come, prepare yourself to profit from the uncertainty that scares many other people away. Arm yourself with the right education, the right resources and peer group to sculpt your strategy. So if you're interested in learning more about that, check out multifamilyaccelerator.com. Okay, like I said, we have a peer group, we have a mastermind, we have an online coaching program. It's amazing stuff, guys. I'm telling you it is, all right? So, wish you all the best in your real estate journey, okay? We're going to see you again here in a couple of days. I think we do these every Tuesdays and Thursday on a weekly basis, okay? We share some of the knowledge that I've gotten over almost 2 decades of experience, all right? Thanks so much for your time, guys. Be safe, and I'll see you next time. Take care.